to the post-2008 era. I think we have reached some decent space in terms of compliance, but from both lender and vendor perspective, I think there are still areas of improvement is how probably we can sum up the past and the present. Now looking towards future, I think there are many prominent things that are coming into collections, which are the buzzword around all the calls, WhatsApp, meeting, chat discussions that I have with bankers and among themselves. One of the biggest flavor of the season is this entire 1600, implementation narrative. There are two prominent parts to the question that I would want to pose to this panel. One is how much do you think it's practically feasible to implement this at this unstructured vendors and FOS agent scale, and B, even in the event if it's implemented at any timeline, what are the challenges that we see post implementation when the borrower knows that this is a call which is coming for collections and for all reasons he would avoid that, right? So how do you look at that? Rakesh, if you would want to take a go.
Hello. Yeah. So Bhavin, 1600, as we understand, these are the new TRAI norms wherein DIDs has to be procured and the calls has to go to, all the transactional calls should be going to customer through these lines only. Now the challenge is this, that currently as we know that the timelines are heading, when the deadlines are like 31st of March by which we all have to introduce it. And currently what I see is there are very limited operators who are providing these lines. I think if I'm not wrong, it is currently Tata only, and procuring that line itself is going to be a little challenging. Post, what I think that this move is very good, and it could be helping customers in curbing out fraud calls and all, but that would be in longer run. Right now, initially there could be a little chaos because currently I believe most of the lenders are going to operate with both the lines, or maybe even if it is with one single line, I'm not sure how the customer will respond to it, what sort of spamming it will be. The next phase will be when we go on longer run, and maybe to the last mile, as I always say, that we have to see that how the smallest and channel and smallest vendor is going to work on it. So this will be a time frame which will be maybe 6 to 12 months or maybe ahead that. In between the phase, what will be there where most of the lender through their in-house calling and all, they might have switched to 1600 series and they are able to call the customer, but later part when the channels are not yet moved to the system, and customers will think like this is a fraud call coming in, they will not take up the calls. So this is going to be a phase which we need to see that how this can be. The migration should be very smooth, maybe a faster, the operator and infrastructure should be available, and there are multiple things lies behind. So I believe the move is good, but how fast we all can switch from beginning till the end, from the top level to the bottommost of the pyramid, this will let us know that how this is currently going to operate and how this move will help the customer as well as the lenders.
Yeah. Apurva.
So I think it's a...
Before I go in, HDFC is one of the most compliant, and compliance conscious banks, and this being one of the important compliance that is coming about, I think your view as an industry leader is going to be directional for many of the lenders, because when I speak to few of the banks and NBFC, they check with me that what is ICICI doing and HDFC doing. So both Nilesh and Apurva, your view on this is really important for us.
Absolutely. So I'll try and put this from three different perspectives. One is obviously from governance. So I think it's a right move. From RBI's perspective, if we see, they want to try and curtail frauds, right? Absolutely spot on, and this has been happening. I think if we go back in time, I don't know if we all have noticed, suddenly Chinese apps are out of the market. So that's one thing which has absolutely ticked all boxes in favor of the regulator, right? And the same is the move here. They're wanting to curtail frauds. But here is an academic question. I hope it's okay to ask.
Yeah.
How many of you feel that there can be a fraud victim who's already delinquent? So if a person does not have money, what are the chances of that person becoming a victim of fraud? So chances are fairly low, I would say. Again, I don't have any quantum or volumes to substantiate. The third angle, everywhere when we are talking about implementation of 160, it's primarily to ensure the service or the transaction interactions, the calls that are being made. But here we are talking about legal obligation that the customer has with the bank to repay the money. So this is neither service nor transaction, this is purely legal in nature. It's an obligation which the customer has to repay. Now I'm going to again maybe give another perspective from the customer's angle. There will be few customers who are transactional defaulters, when I say they would have missed one payment here and there, versus the other customers who are chronic defaulters. For chronic defaulters, this is an easy getaway. Again, an academic question, how many members in the room today get a call from 140? Pretty much no one, because we all are on D&D, and the chronic defaulters will take benefit of this in a wrong way. So I think from the regulator angle, I think it's spot on. This is very much required and must be implemented. From lender's point of view, I would say that most of the ones who are defaulters, they do not have money. So even if we attempt fraud, my guess is they will not be successful. And from the customer's angle, the ones who are going to be chronic defaulters will misuse, I would say, this lever in their own favor. So again, different perspectives how this can be approached. Again, time will spill that story, but I think it's important to understand how this will eventually impact. And like we said, we are all wanting to be compliant. We want to support the country or the regulator, but at the same time, we have to look at the granular use cases, is what I would say.
Fair enough.
Very well articulated by Apurva. Yes, this is must for the industry to avoid the frauds which are happening even in collection industry today, though it's in a very small manner as we don't have the numbers to talk about, but then that's very much required. But at the same time, one can see the challenges which are going to come up. As rightly said by Apurva, the contactability is going to drop drastically because people know that the number 1600, if you are having any dues, the call is going to come from the banks. The other side is it will push a lot of telecalling kind of portfolio onto the field. Again, moving on to the higher cost channel and where we have scarcity of manpower on the field. That's not another going to be a big challenge. And then the third angle to it, all these challenges leading to the loss numbers having an impact on it. Yeah. Right. I'm sure the regulators are looking towards all these angles before it's getting implemented. What can happen best? So I remember there was a time when RBI implemented or regulators implemented all collection calls should get recorded. Sorry. And it was mandated to all agencies to ensure that you have a recording system. Even today, after more than a decade, everyone has a recording system where the call gets recorded, but all in bits and pieces. So it was like a tick in a box. Yes, we have a recording. If this gets implemented in the same fashion, then we will not be able to restrict the frauds, which is the objective behind the implementing 1600. Right. If this really has to be done in right spirit, then the regulators, the lenders, the agencies should get synchronized with the technology today on a given platform where the compliance becomes easier to implement and should have minimal impact towards the performance or the end results. Right. That would be the beautiful way of implementing this. Right. This is the talk of the town. Everyone is talking today what's going to happen on 1600. Right. But then there needs to be certain solutions which will help all of these ecosystem, regulators, lenders, agencies to come on one platform, implement this for the good of industry, but at the same time doesn't take the hit which is expected to get from it.
Yeah. So to sum it up, I think what I hear all of you say is that largely the telco ecosystem is not ready to even get this supplied and implemented. So that needs to be solved. If it is implemented on ground, it would have its repercussion. Collection does not cut through the use case of probably this, and maybe given an exception is something that we can hope and wish for. In the event if it has to be mandated, probably how do we implement that and do not make it a tick in the box like call recording is something that you might have to think through. So I think with 1600 we see challenges, and I think there are enough ways in which probably we would have to address this down the line. Similar to that is the next question, which is probably the last question in interest of time for us, which is around the DPDP Act, which is about to come into existence, and that also has a significant amount of impact on the whole collection ecosystem, with PI data not flowing to the vendors and whatnot. What again do you think is the practical chance of this, and what are the impacts, if we can get to know as the last part of the question from this panel? Mayank sir, if you would want to go for this.
The draft of DPDP Act is a very step in a right direction. Unfortunately, we have seen our customers not getting protected, and DPDP Act is all about customers. It does not differentiate between a non-delinquent, delinquent customers. It's all about customers, and that is the beauty of it. Collections will become a problem statement to be solved for. How do we solve for is something that we will have to work towards it, because it is definitely going to throw a lot of challenges in terms of our day-to-day execution, data transfer, data fiduciary that we are talking about, protecting customers' rights. But things are going to get very stricter is what the DPDP Act stands out for. And we hope that in the interest of the lenders and in the interest of reduction of losses and all, we will be able to have some of the say of the lenders also in the DPDP Act. Because in the current version of the draft, yes, a lot of things are going to change. The collections will not remain what it is as of today.
I'll put it this way to the forum and everyone. India is a land of mouth-watering opportunities and eye-watering challenges. People may agree, people may disagree on that. Now, DPDP Act, look at the beauty of it. The DPDP Act, and one of the clause says DIPA, is Data Empowerment and Protection Act. Now, these two words are conflictory. They are contradicting each other. On one side, we are empowering. On one side, we are protecting. So that's the beauty of DPDP Act in one line. However, having said that, another set of challenges. You have a lot of regulatory bodies. The intercept point is going to be maximum. RBI, SEBI, IRDA, government agencies, the tax department, look at the intercepting points. Now, how is going to be this addressed, and at which point of time, what interception is going to happen, and for which we need to have to we need to collect consent from the customer. So we will see evolution of consent managers, we will see evolution of data fiduciaries, and we will see customers playing around. It is good. Now, this is going to be, there are certain challenges around it, which probably we will only correct it as we go and deep dive into the same as we implement. That's the first part of it. The second part of it, look at the process value chain. Value chain says it is a lender, the intermediaries, or the business associates and the customers. Are the business intermediaries ready for that? And my answer to this is no. The most high-tech enabled, tech-driven companies are not ready for this kind of structural shift that is going to happen. That's point number 2. Now, having said that, with all these challenges, there lies an opportunity. The opportunity is development of an architecture which will talk to the various government bodies, and whosoever comes up with the architecture in the collection lending or in the lending space, cutting across the processes, cutting across the people, cutting across various points, those are going to be the winners. And eventually what will happen is these biggies of the world in collections will have a tie-up, or there is going to be a kind of a consortium that will get created, where the small players will tie up with these big players, and there is an opportunity for each and every vendors or business associate to be part of this ecosystem. So structurally, ecosystem is going to change, and it is going to change drastically. And we cannot imagine the kind of repercussions it will have both on the upside of the process as well as the downside of the process.
Yeah, thank you for your opinion, sir. I think before the panel actually throws us out, after allocating 45 minutes, they are doing us up in 30 minutes, but I think we'll have to quickly summarize the entire panel. I think what we have understood is that in terms of the current state of compliance, we are, fairly there, but still significant amount of scope. But at the same time, in future, we are seeing some significant challenges, and from both the lender and the vendor and the regulator side, I think there is enough that needs to be done. I think compliance needs to become the center stage of the conversation besides the efficiency and the cost that we have been chasing all this while. Thank you so much. It was really interesting and insightful for me, and I hope the group. This is discussion. Thank you so much.